Hi, Assalamualaikum. My name is NURUL IZZATI binti Isham. My metric number 2020295672. So today I will be presenting a topic of introduction of consumer credit. So a little bit background for consumer credit. The use of credit has been grown and it is officially used in widely. So in back years, the use of credit was not in demand yet. For nowadays, it is necessary to have for individuals or people for them to have a credit card or consumer credit, since they have a very limited amount or resources for them to purchase any goods or services or any specific items that they want. So commonly, consumer credit is provided by the banks, retailers, merchants, and so many on. And it is allow consumers to purchase any goods or services that they want, and they can repay the item afterward within a period of time. There is a few types. There is a two type of consumers. The first one is open credit, which includes credit cards, charge cards, revolving credit lines, and retail charges. The other one type of consumer is loans, such as personal loans, car loans, and education loans, and so on. So for loans, it is common to utilize for a certain purpose with a specific amount and a particular of times. Like nowadays, credit cards are the most common forms of open credit, and it gives flexible way to consumers for them to access the fund immediately when they are needed.
Assalamualaikum. My name is SITI HUMAIRA binti DAMANHURI 2021-914-823. Today I'm going to present to you about purpose of consumer credit. First, installment and revolving credit, which is installment credit provide a large amount to borrower, which can make a set monthly installment until the loan is repaid full. For example, student loan, personal loan, mortgage, and others. Second, emergency funds. Who are emergency fund with 3 to 6 months worth of living expense for unexpected problem. For example, loss of job or medical emergency. Third, flexibility. Payment plans that provide instant access to product and services access. For example, home or car repair. Last but not least, convenience. Reducing the large sum of cash. For example, go for shopping, renting a car, dining out, and for other entertainment purpose.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad HILMI bin Abdul Rahman. My metric number is 2021985571. Consumer credit. Why it is important? First, it is important for economic growth. When consumer and business can borrow money, economic transaction can take place efficiently, and the economy can grow when they have spending activities. The business can make profit and the economic will grow. Second one is purchasing power. Consumer credit allows consumer to satisfy their needs and wants even if they don't have the money at the moment of purchase. Third, investor guidance. Consumer credit data is used by investors and analysis to determine the degree to which people are taking on credit to pay for goods and services. Consumer credit used from month to month is closely measured by economists because it is considered an indicator of economic growth or contraction. Fourth, financial stability. Allows consumer to get an advance on income to buy product and services. In emergency, such as car breakdown, that can be a lifesaver. Fifth is uplift social status. Consumer finance serves as the source of financial stability and uplift the economic and social status of the household. It can reduce the impact of inflation and optimize the spending. Lastly is spending option. Consumer credit offering a consumer financing solution allows your customer to cash flow their way into being able to make the purchase.
Current issue of credit consumer. The Malaysian Minister of Finance, MOF, has begun their initiative to regulate the industry of consumer credit service. Consumer credit is more commonly used to refer to unsecured debt taken to pay for routine goods and services. The goal is to improve credit consumer protection in Malaysia, as there are an increasing number of unregulated entitled active in the consumer credit market. The goal is to improve credit consumer protection in Malaysia, as there are an increasing number of unregulated entitled active in the consumer credit market. They include non-bank factoring and leasing companies, impaired loan buyers, ILB, and debt collection agency, DCA. The CCA intends to develop a framework for authorization for non-bank firms that offer credit and credit services in order to safeguard the vulnerable. The Treasury's consultation paper on regulating the BNPL business underlines the significance of subjecting them to the same sort of responsible lending criteria as banks. According to study, almost half of young people feel they have a detrimental influences on their financial conduct, since wages are falling to keep up with the growing living costs. Notably, for electricity and housing, the widespread usage of BNPL should raise regulatory concerns. Consumer credit in the United States expanded at the seasonally adjusted annual pace of 6.9%, up from 6.6% in September. Revolving credit rose at a pace of 10%, while reversing a credit increase at a rate of 5.8% in December 2022. US consumer credit climbed by 24.37 billion, falling short of market estimate of 28.3 billion. Recommendation. The EU is developing a new consumer credit directive amendment. The ECO, DECO, has joined forces with 14 more non-governmental organizations to discover ways to safeguard consumers against irresponsible loans. Based on the alliance, there are several elements that now cause customer harms, such as the fact that credit worthiness evaluation does not take into account potential bad circumstances. The European Parliament and the Council of Europe are studying a measure to modify the Consumer Directive. The European Commission's proposal to modify the Consumer Credit Directive has been supported by a coalition of consumer credit lobbying organizations.